Gold is the big event in town at the moment in the markets. It has been now for some time, estimating it's on course to get back to the record highs we saw a decade or so ago. But how is it for small companies within this space? Let's catch up now with the chief executive of NQ Minerals, a next listed company, David Lenegas. David, good to talk to you. Let me just quickly go first of all and take an overview of your company because you've seen some recent releases which have been very encouraging. I know you have a number of different assets. What do you consider to be your flagship asset at the moment?
Yeah, good morning, Jeremy. Look, our flagship asset has always been the Helier gold mine in Tasmania, which really isn't a gold mine at this phase. It's a lead zinc producer with a long 10-year mine life. Um, we're getting very good production levels out of that. COVID-19 hasn't affected us to any great extent in Tasmania. The Tasmanian government regard mining business in the state as an essential business. So things are progressing, as we would expect there, and we're going through processes of increasing plant capacity by about another 33% over the coming months. So that's really our prime asset. Long life, you know, doing very well. The next thing that we're focusing on is to reopen the rich Beaconsfield gold mine just down the road in Tasmania, and we're just finalising our work with all the consultants and the government there for mining plans with a view to try and bring Beaconsfield back into production as a high-grade gold mine in Australia, hopefully by the end of the year. There's a lot going on. But look, Jeremy, you mentioned that we're listed on
What is
NEX. Now, NEX doesn't exist anymore. It's called Aquis Stock Exchange. So they've got new owners, and from what I hear, that the activities on Aquis are going to be a lot more active as things move forward than the doldrums of NEX and the old ISDX. So I'm looking forward to seeing what the new owners of Aquis do.
Okay, I want to pick up on that in just a minute if I can, but I want to return to take a look in some more details about Helia. Now, knowing that it was when we last spoke your big asset, but I also knew you were bringing these other assets along. Helia, what about the all-in cash costs at the moment? We've seen this big rise in the price of gold. Now, sometimes small cap companies sometimes see an increase in the cost base when you get a rise in gold for whatever reason it is. Have you seen
Look,
any rise costs for every
so
ounce you're digging out of the ground?
Helia's primary a lead zinc operation, and we get a lot of gold and silver credits from our lead and zinc concentrates. So even though the lead and the zinc markets are not terribly good at the moment, but we are seeing good signs of recovery in those prices on those commodities. We do get some very good gold and silver credits, particularly with our lead concentrate. So it's roundabouts and swings. The gold price has been very good. We end up with more gold and silver revenue to compensate for falling lead and zinc prices. So hopefully, as we catch a perfect storm as the world, businesses get back to work, particularly in China where a lot of our product goes, we've optimized the operations to as good an operating cost as we can get. And as we see the lead and the zinc markets improve, and by all account, most of the world big banks, on the pundit side are calling gold and silver to rally quite significantly from here because of global uncertainty. We should have a good wave of commodity prices across the board, adding significantly to our top and bottom lines.
What about Beaconsfield? What sort of work have you got to do there before you bring it up to production? I mean, there's a lot of hurdles I know to jump before you get to that point, but how sure are you that this is going to be a successful mine?
Look, the management who were there when the mine shut down in 2012 and 2013 are our principal consultants. So our knowledge base of what was done to shut the mine down and why it shut down in 2012 is very good. The mine shut down in 2012 with an operating cost of $1,000 an ounce circa. The gold price at the time was $1,200 an ounce. They needed to put a new access decline down. They didn't have the money to do that because there wasn't enough margin in the gold prices. and they needed to replace a lot of the aging underground equipment that was there. So they made a decision in 2012 to shut the mine. But the resources are still there, and we've just put out a new JORC compliant resource from the consultants down in Australia that have calculated, nearly 500,000 ounces at over 10 grams to the ton, which is a very rich gold mine. And we're working through plans with our mine reopening plan, internally and with the government to look at, bringing Beaconsfield back into production over the coming 6 months. The key critical element for us to start pouring gold is the refurbishment and bringing up to spec for 2020, particularly on things like mine and plant safety requirements that have changed in the last 8 years, is the plant. So the estimates are that the plant refurbishment will take somewhere between 4 to 6 months, and the quicker we can start that, the better. But once the plant's operating, we've got plenty of feed to put through into the plant, start production very quickly. So all of our consultants and management are focused, targeting on starting gold production from Beaconsfield as a low-cost producer by the end of the year, or at latest early next year. But it's a very exciting project for us.
Now, as I said at the top, the trajectory for the price of gold means that those two assets are obviously of prime importance to you. But I'm talking to a lot of mineral analysts quite a lot these days, and they're looking ahead to when, as you say, the lockdown eases and we get back to business. One of the big things I'm hearing about the exciting things in the mineral space at the moment is parts for the new evolution of batteries, the electric batteries. And I know that through your expansion at Barnes Hill, the nickel resource in Tasmania, you got some exciting news there as well. And I guess this is an area where we ought really to be focusing more on, because we know a lot about the gold market, but what we don't know about is the demand and the exciting future for some of these battery metals. How excited are you about what's going on at Barnes Hill?
So we've just increased the resources that we're using for the pre-feasibility study at Barnes Hill. I don't know, it's gone from 14 million tonnes to 25 million tonnes of nickel, cobalt, mineralised ore. And that gives us a very long mine life project. And the other reason why we bought Beaconsfield is it's the mining lease effectively right next to Barnes Hill nickel cobalt project. So we can share a lot of the infrastructure that Beaconsfield already has in play. So, it's a big, exciting project for us. Speaking to institutions around the world, they are focused very much on the EV and energy storage market supply chain. And nickel and cobalt are still a very important part of that supply chain going forward. Even though the price of oil's dropped, everyone's COVID-19 and people are, not flying in airplanes as much. There is a concerted effort globally to have more energy storage and electric vehicles, and that's not going to stop. So if you look across our, the NQ spectrum of minerals that we're either mining or looking at bringing to production, you've got lead, zinc, nickel, cobalt, gold, copper, silver. I mean, they're really the building blocks for a lot of the EV space. So, we're pretty excited about where we're headed.
My understanding is that you are speaking to off-takers at the moment and battery industry players. Tell us more about this and where you are along that process.
Well, look, from Helia, our prime off-taker is Traxys, the big European commodity trading house. So, we're in advanced discussions with them always on new types of product that we're looking at putting out from our operations in Tasmania. The fact that Barnes Hill has now popped its head up as a potential producer of nickel, cobalt, copper, lead, zinc, gold and silver, we're certainly getting approaches from other offtake partners that would like to sort of participate in that future supply chain. So, but I can't say too much. A lot of that information is confidential. It's probably not the right forum to be discussing. But there's certainly a lot of interest globally on what we're doing from people who buy metals.
Okay, well, we'll keep pushing the door at that one because I know this is an area of exciting interest. You mentioned at the top quite rightly. I mean, I've been in the markets a long while, as you have as well. But my connection with the markets is not as deep as to recall that, of course, Next, as you say, has changed into the Aquis Stock Exchange. But let me just quickly pick up on that point and talk a little bit about this still relatively small exchange. It doesn't give you the sort of exposure, whereas someone of your experience and coverage of the markets perhaps maybe would like to have. And I know that a lot of people looking at this interview will think, well, how can I get a part of this? When you're on a small exchange like that, it does narrow down your possibilities, doesn't it, in terms of engaging with the retail investor? Do you have any plans to look at a proper, I correct myself in saying, a bigger listing on a bigger exchange at some point?
Yeah, look, we've already made public that when we restructure the debt within the company, and there is some pre-startup debt that for Helia that sits on the company's balance sheet that we are restructuring, and we've announced some months ago that we'd signed a definitive way forward with Traxys, our offtake partner, and a as yet unnamed major European resources bank to restructure about 60 million US of the company's debt, which will add quite significant amounts to our bottom line and top line. So, but we've said publicly that once the debt's restructured, we will start taking moves to move NQ to a tier one global stock exchange, and whether that's the London Stock Exchange, the Toronto Stock Exchange, where we've already had a number of sort of potential discussions. But our view is that London is the home of resources, and this is the area we want to focus. So, but until such time as we've got the debt restructured, which hopefully isn't that far away, we'll sit where we are. We've got our ADR going live in the United States sometime in the next couple of weeks, and we're also actively pursuing a listing in the European marketplace as well, to sort of help compensate for the fact that the Aquis Stock Exchange is a little bit illiquid for global investors. So yeah, we're certainly mindful that we want to put NQ in front of a much wider and richer audience than what currently plays Aquis at the moment.
Now, I know you're in lockdown, as indeed, of course, so many of us around the world. How has
Lockdown.
COVID
I mean, where am
affected
I? I mean,
the
tonight I could be on a Caribbean beach. No, I'm in London at the
you
moment.
could be. Yeah. Yeah, I mean, how has COVID affected your operations? At the moment, of course, you're dealing with a lot of the administrative side of things. I guess you're able to do this on a day-to-day basis in any event. It's just a question of not being able to get around and seeing people face to face, I guess.
Look, from an operations perspective, it's business as normal. I mean, Australia is not like the rest of the world. I mean, Australia's almost out of the COVID-19 pandemic. Their curve is probably one of the best in the world. It's probably almost goes close to matching New Zealand. And Australia's starting to open up. We're all quite envious over here and what the Australians can do
Yeah.
at the moment. So, there's the operations in Australia and all the work that's going on to make them bigger and bring in new production, particularly at things like Beaconsfield, are going on unhindered. From a corporate perspective, you know, I find, and a lot of people are finding that people are actually doing more work because you're not sort of flitting around in airplanes or going for meetings, having meaningless cups of coffees, trying to sort of work out where you're going to go next. So we find that we're actually working longer hours and far more effectively working from home with all this wonderful technology we've got these days. I think we're actually achieving a lot more. And it's interesting, with all the bank restructuring work we've got going on, all the Europeans are actively at work on the banking refinancing stuff. From a corporate structuring side of thing, everybody's still working, and I think things are working a lot more efficiently. I think the world's got a Alt Control Delete and Reset button going on here, and I think it's sort of going to be quite interesting going forward.
Yeah, you're not the only boss of a company to say that and indicate that they're looking at ways of finding to take this sort of new way forward. Look, let me just quickly round this up and look at look at your in tray and work out what you're going to be doing for the rest of this year. How important is the debt restructuring over everything else, or are you more concentrated on trying to get more production out of Helia and Beaconsfield up and running to take advantage of the high gold price?
Look, everything all parallels together. I mean, the debt restructuring is very important for the company. it's one of the big criticisms I've had when I joined NQ in November is look at the amount of debt sort of sits on the NQ balance sheet. But what people don't understand is this is a very big project at Helier. It's a big flagship project. If you wanted to start it again today, it cost you $450 million. So the debt on the book to me is not extraordinary, but it's something that we want to restructure because the original debt was quite expensive because the risk was there. Now that the risk is pretty much been mitigated, there's a big push from the corporate side to reduce the coupon rates that we're paying on our debt and sort of restructuring it out to sort of more befit the nature of the project. Beaconsfield for me is pedal to the metal. We want Beaconsfield producing as quickly as possible. There are always challenges in recommissioning and working with governments to restart projects like this. But the consultants and ourselves feel that there is an opportunity here to have Beaconsfield going by the end of the year. If it can be done, that's what we'll try and achieve. The gold price is performing very well. If you look at Bank of America not that long ago, a few weeks ago, their view is they're calling US dollar gold prices potentially in the next 18 months to circa $3,000 an ounce. So the quicker we can get Beaconsfield into production to add the $100 to $200 million a year in revenue to NQ is certainly something that floats our boat, and that's where we're pushing.
Okay, David, we'll leave it there, but thank you so much indeed for joining us. It's a pleasure to speak to you again, and looking forward to catching up with David and I guess at some other time, face to face, hopefully. But that was David online with us with a look at NQ Minerals and the progress that the company is making as we look into the rest of 2020. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.